the crystal, guess and talking about how capex is likely to pan out. So let's get an industry view on the same as well. Mr. Rahul Mehta, Chief Mentor at CMAI, is joining us. Rahul, hi. Thank you so much for making time and speaking with us. We've called you because we're reading headlines in the newspaper that talks about how the textile industry is continuing to witness production cuts. Of course, last year it was marred by higher cotton prices as well as the global weakness. What's wrong this year, and how long is this weakness likely to persist?
Well, my personal opinion is that the overall inflation in the economy is hurting the consumer sentiments in the buying and purchasing of apparel. You see, clothing as such is an essential item, but the amount of clothing that a person buys is entirely in the realm of discretionary spending. And that is where I have a feeling that consumers are cutting down on the extent of garments that they are purchasing, essentially because most of their monies are going into the other more important items as per their reckoning. So this is why I think, in spite of the slight softening of the cotton prices and raw material costs, I think there is a slowdown, and this is being seen across the board. I mean, not just the value segment of the industry, but also in the semi-luxury segment of the industry. I'm seeing a slowdown across the board, and I personally don't see this trend reversing till at least about July or August, by which time the festivals will get going, and the purchasing relating to the festivities start making an impact.
What you're talking about is the fact that weakness is not only in the export market but domestic market as well. You detailed about your outlook on the domestic market, but export wise, are things picking up?
No, in fact, they did pick up for some time, till about February or March. But after that, even the exports have slowed down. As you might be aware, the overall growth in 22-23 financial year was hardly about 8 to 9%, which actually the year began very promisingly. But I think the continued war in Europe, the negative sentiments and fears of an oncoming recession in the US markets, some of the EU markets, I think that is impacting the Indian exports. The other factor that is happening is that people were very, very strongly attempting to move out of China as a source of supply. I think that sort of tension, or that sentiment has slowed down a bit, and people are going back to China. And in any case, I think countries like Bangladesh and Indonesia, Vietnam, they seem to have got a larger share of the pie of the business which tended to move out of China. We unfortunately have not been able to get that much of an advantage.
Well, the other thing which we are observing globally is that yes, inflation has started to hurt or has hurt demand so far, but inflation as well as some of the weakness in economic data is already being captured. Is it fair to assume that the numbers at your end will only start improving with a bit of lag? Because now that prices have come down, demand is already hit, and almost every price, we talk of soft commodities, hard commodities, everything has come down due to high prices, and demand was also been impacted. Just traditional economics, high prices impacts demand. So all of that will get adjusted in the next 3 to 6 months. Is it a fair estimate?
I would say so, because one thing you have to understand, that most purchasing of garments, especially in the trade, happens about 3 to 4 months before the actual sale happens in the retail level. So if, for example, if the retail is likely to pick up in September, October, the purchasing will be reflected around May or June. So far, we have not seen any such increase in or improvement in the sentiments as far as US and EU markets are concerned, and they constitute almost to 70% of our Indian exports. So that is definitely worrisome. And I feel that we have lost this particular season as far as our growth rate was concerned. And in exports, we will only see a pickup sometime in the latter part of the year, probably in the third or the fourth quarter.
Okay, Rahul, on that note, we let you go. Appreciate you joining us.